Hello, this is Les Goldstein, President of Personal Financial Strategies Incorporated, a financial planning and wealth management firm located in Park Ridge, Illinois, and I am pleased to be sharing with you our January 2014 Economic Update monthly video. In this video, I will be talking about some of the important events that drove market activity in January, and I will also be looking ahead at what may be impacting our wallets in the upcoming days and weeks. Please stay tuned at the end of this video for an important disclosure statement. Markets ended the first month of 2014 on a down note, driven lower largely by worries about emerging markets' currency crises that is affecting the economies of countries like Turkey, Brazil, South America, South Africa. While these issues haven't affected the U.S. economy, they are being felt in our volatility relative to U.S. stocks. For the month, the S&P 500 lost 3.56%, the Dow lost 5.3%, and the NASDAQ sank 1.74%. While it's never fun to watch a sell-off, we're happy to report that U.S. indicators show that the economy is still growing at a modest pace. Investors got their first look at fourth quarter 2013 gross domestic product, GDP, which clocked in at a solid 3.2% above the desired 3% targeted trend line, giving us high hopes for 2014. Earnings season also began in January, and with nearly half of the S&P 500 companies reporting earnings growth stands at 7% year over year, the best showing we've seen since the fourth quarter of 2012. And revenue growth also is expanding at 3.5% for the year. Turning to jobs. While the December jobs report showed a troubling decline in job creation, January's weekly unemployment claims painted a more rosy picture. This could indicate that the December report was impacted by seasonal factors, i.e. holiday hiring and firing. Though we don't have monthly data for January yet, economists are predicting a significant bounce back, putting labor market growth back on a positive trend. Now turning our attention to the Federal Reserve. The Federal Reserve FOMC, Federal Open Market Committee, met during the last week of January and voted to continue its program of tapering quantitative easing, slowing its monthly bond purchases by another $10 billion to $65 billion in purchasing per month. Investors see this move as the Fed's sign of confidence in the economy and its economic recovery, although we've still got a ways to go before it's possible to say that we are fully recovered. Overseas, the Fed's tapering of its quantitative easing policies is helping to drive currency sell-offs in emerging markets as investors flee foreign currencies and buy dollars. Over the last few years, investors have poured money into developing economies and developing countries seeking higher rates of return. Now that the Fed is cutting back on its easy money policies, weak fundamentals in many emerging market countries are being exposed, and investors are moving capital out, driving down currencies and threatening growth abroad. While these problems have not affected the U.S. economy yet, a prolonged emerging markets currency crisis won't be good for the global economy, and some U.S. companies may see their growth prospects fall because of declining demand abroad. It's too soon to know how the entire situation will play out, but we're watching it carefully and actively developing strategies to mitigate risk for our clients. Looking ahead, investors will probably see some more choppy days as we watch to see how the emerging markets crisis affects markets here and wait for more domestic economic indicators to give us signs of direction. Now, what's happening at PFS? To keep you up to date on our activities, here is a brief list of what's happening in Personal Financial Strategies over the near term. Backed by popular demand, our Big Picture Retirement Planning Workshop classes start again at the end of February. For those of you who have not taken our course, please know that this is a rigorous 3-session, almost 9-hour deep dive into financial planning and management for retirement. The course is offered through Oakton College and the Department of Lifelong Learning. To register free of charge, please call Sherry Adelson here at PFS at 847-268-3670 extension 100. That's 847-268-3670 extension 100. And please invite an invitation to friends and family members who you feel would benefit from this important content. In addition, on April 3rd, we will be reviewing an investment opportunity that may be suitable for income-oriented investors who seek diversification away from the stock market. Please join us at McCormick & Schmick Restaurant for either a luncheon or a dinner to learn about an asset-based lender known as Franklin Square, a company that now manages $10 billion in loans and is the largest business development company in the world. Again, April 3, McCormick & Schmick, asset-based lender, Franklin Square. Call Sherry Adelson at 847-268-3670, extension 100 to sign up. As always, our Ambassador Club members and Inner Circle clients have special reserved seats. Once again, this is Les Goldstein with Personal Financial Strategies Incorporated, signing off for the month of January 2014. I hope you found this commentary to be interesting and informative. I'd love to hear what you have to say, so feel free to call me at any time at 847-268-3670. I'm at extension 102. If you'd like to discuss your personal financial situation, give us a call again at that same number. Finally, the required disclosure. While we believe that the information presented here is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any investment security. Please consult with us before making any investment decision. Les Goldstein, PFS, signing off for January 2014. Thank you.